You've been on this program before, and we've talked a little bit about trends in the market and the economy and otherwise. Why is it that you think the Fed needs to cut sooner rather than later?
Well, hi, Don. Thanks for having me back. So the Fed has done a really good job of bringing down inflation. But one thing we know is that interest rate changes, monetary policy works with a lag, and that's true on the way up as well as the way down. The Fed was a little too slow, perhaps a lot slow, in raising interest rates. And now I'm afraid they might be too slow in lowering interest rates. We're very close to that 2% target. I don't think the Fed needs to wait any longer. Now, I'm not saying that they should be aggressive. In fact, I think that by the end of this year, the Fed funds rate will be higher than what the market is currently anticipating, and that it should be. But I think the Fed should start cutting rates now, 25 basis points perhaps every other meeting, and getting it down to a more normal level. And that I'd also like to see the yield curve normalize. We still have a very inverted yield curve. I'd like to see long-term rates go up a little bit from here, and the Fed funds rate going down to perhaps about 4%.
All right, so a steeper yield curve, so to speak. Now, that's a good thing. But over the last, we're just 1 to 2 years removed, Vahan, from the worst inflation that this country has seen in 40 years, 40 to 50 years. Why is it that we should not be worried that inflation could be a problem again and that the rate cuts maybe don't need to happen as imminently because we are still concerned about that erosion of buying power for much of middle America?
Well, the first thing I would say is, why did we have this kind of inflation? And I would say it was all pandemic related, or primarily pandemic related. This was supply side inflation. It wasn't so much demand side inflation. So yes, the Fed should have acted more quickly, but monetary policy was not really going to be as effective as straightening out the supplies and getting rid of these supply constraints. So I don't expect that kind of inflation again. Now, one thing I am very concerned about is the geopolitical issues, especially in the Middle East. They do have the potential to push up inflation. So as a result, I don't think the Fed needs to be very aggressive. I think getting it down to about 4% by year end is a good target. But I don't think they should wait any longer. I think they need to start doing 25 basis point cuts every other meeting to send the market a signal that things are getting close to their target and we can ease up a little bit on interest rates. Monetary policy is a bit too tight right now. I'd like to see that yield curve, go upward sloping, as you said. That's a very good, healthy sign for the economy.